Good evening and welcome to Mint. You're joining us for the weekly roundup of corporate events. And it has been an eventful week, what with the Bharti Walmart split on their retail venture. And of course, the September quarter earnings season getting kicked off with Infosys. So I've got with me some of Mint's corporate reporters and they'll tell us the details on some of these events. Hi, Sapna. So Bharti and Walmart have finally split. So what happened there and what's the future?
The talks were going on for a while as to what would the state of this joint venture be. Walmart obviously was looking at clearer, easier, simpler regulations, and even though the FDI was allowed into the country, 51% for MNCs in September, the rules by no measure were any simple. There was still requirement for getting 30% locally sourced from small and medium enterprises. Now, the definition of this is not very clear. Another thing was that Another thing was this $100 million investment in back end and front end. So these things were not very clear, and Walmart is anyways caught up in has very stringent anti-bribery laws and corruption practices, and it was not finding favor with this. So it's committed to the Indian market. It takes over the wholesale back end business, which has 20 best price modern stores, and it will operate those. And when the regulations become simpler, they said they will come in at that point in time. Whereas Bharti is in a hurry. Sunil Mittal, he's an entrepreneur, he wants to scale things up fast. So they're committed to the retail business and they will look at growing that in the years to come.
Thanks, Sapna. Okay, and Infosys results. So judging by how the stock moved, seems like they may have beat expectations. Is that right, Zara?
Sure. Hi, Lisa. Infosys did beat market expectations today, and the stock in early trade rose up to 7%. Their dollar revenue, quarter-on-quarter base, it went up to 3.8%, which the market expected to be around 2.5%. So, Infosys is definitely on the right track. With Narayana Murthy's return and his whole plan to bring Infosys back on the right track in 36 months it's in line, and investors are backing that. And in this quarter itself, they closed around they got 37 new clients, out of which 5 were from the Fortune 500 companies. So, as analysts say, it's on the right track, but it's a company which is which is the second largest IT exporter. So we have to give it more time to come back on the right track.
Thanks, Zara. So another heavyweight is declaring results, and that's Reliance Industries next week. So what are the expectations on that, Aveek?
Yeah, Lisa. Reliance is expected to post a good set of numbers yet again. There are some issues with respect to the refining margins and the refining environment being weak, but nonetheless, because the dollar has appreciated against the rupee so much, Reliance is expected to post a very healthy set of numbers on rupee terms. Revenues are expected to be up around 12 to 14%, and net profits are expected to be stable. They are not expected to rise too much, but year on year, net profits in the September quarter are expected to be around the 5,400 crore mark, which is a 1 to 2% increase. Petrochemicals is expected to really perform very well for Reliance, also because again in dollar terms, though the margins have contracted, but in rupee terms it's been a lot of money for them because of the depreciation. And as has been the case over the last few quarters, the oil and gas business is going to be a bit of a drag, but all in all it is going to be a good result for Reliance.
Okay, great. And you also cover IOC, and they have won a bid to buy stake in Haldia Petrochemicals. So can you give us details on that?
Yes, so Haldia Petrochemicals is one of the most vital petrochemical assets which is already there on the ground in the country, and it has been on the block for some time. There has been a lot of dispute between the state government, which is a stakeholder, and the Chatterjee Group, which is the other major stakeholder. Nonetheless, the government went ahead with it, and yes, Indian Oil, which already owns a 9% stake in the company, has emerged as the single bidder, and their bid has been accepted. Though the bid valuation is not yet out, sources say that it is around 25 rupees a share, which will translate into 4,600 crores that IOC will have to pay. However, the matter is not settled yet because the TCG Group has a right of first refusal, and if they exercise this, then the entire stakeholding will go to the Chatterjee Group. But if they don't, then IOC is likely to gain majority control of Haldia Petrochemicals, and as such they will pose a good competition to Reliance, because the only meaningful big petrochemical asset in the country belongs to Reliance.
Okay, thanks, Aveek. That's all from us today. Do log on to livemint.com for more details. Thank you.